This is Greg Michalowski from FXDD with the Forex Quick, specifically for FX Street, taking a look at the Aussie versus US dollar. Well, tonight, our early New York morning at 12:30 a.m. New York time, the Central Bank, Reserve Bank of Australia, is going to announce their interest rate decision, and the expectations are that they raise the rate to 4.5% from 4.25%. And this level was thought to be sort of a more of a neutral area for as per the Reserve Bank of Australia, and as a result, we're going to be looking for what they have to say in regard to where the interest rate stands in relation to their expectations or their thoughts about the economy. Are we more at a neutral area, or is monetary policy still accommodative? It's thought perhaps that they're going to be more happy with the level where it is right now, kind of in between neutral, accommodative, and restrictive, and it's at the it's just right. So taking a look at the currency pair, the Aussie versus U.S. dollar, from a technical basis, there's going to be some key levels that we'll be watching on all the different periods, from daily to hourly to the 5 minutes. So let's take a look at the daily chart, and what we can see here is that the market's really been in a consolidative, almost downward consolidative type of range here, a bear flag maybe. The high of this trend line comes in at 93.20. The low of this old trend line, if you take these highs, 1, 2, 3 highs, we broke above that, then use that level as support. Couldn't close below it until this day right here for a single day, and then the market moved right back up. So this level becomes support again at 91.84, and the current price trading at 92.43. So that's going to be a key level through the announcement tonight, through the comments, and if the market should break below that level, we should see some further selling in that currency pair, perhaps toward this trend line, or toward the 100-day moving average, which was also at the 38.2% retracement down at the 90.78. That's of this low to this high. So this level is going to be our key level on the downside for the Aussie versus U.S. dollar, with steps down to this trend line, step down to the 38.2%, down to the 100-day moving average on the downside. Now let's transition, take a look at the hourly chart, see if that's giving us any clues. And what it's saying here, with these two moving averages fairly close together and 38.2% kind of dissecting them, is that the market is in a neutral situation here. We are a little bearish on the day. We went down, tested the 50% retracement of this last move from this low to this high. That 50% retracement comes in at 92.28, and we bounced off of that level, currently trading at 41. So from an intraday basis, what I would look for is for buyers above this this blue and this green line, maybe even above the 38.2% and the 92.51. If the market's able to hold this level, this blue line here, which comes in around the 46, 47 level on the top side, we could see the market go down, test this 50% retracement, and maybe even see further liquidation down toward the 92.06 level before it's all said and done, as the market tries to squares up their positions before what is going to be an important Reserve Bank of Australia interest rate decision later on tonight. So that's my look at the technicals, and also my opinion on some of the fundamentals that are going to be driving that currency pair. The risk is obviously increased as we enter into this interest rate decision time period, and if you don't have a position, it might even behoove you to think about using these longer-term areas as support and resistance, and seeing what the market does, because I think that if we do get breaks below this trend line, for instance, we should see further liquidation to the downside, so there's further potential for a move to the downside. And conversely, if we do get a break above this upper trend line, we could see a move toward the highs of 2010. This is Greg Michalowski for Forex Street with a Forex Quick, taking a look at the Aussie versus US dollar.